See my screen, payroll control list? Am I sharing right now?
Yes.
Yeah, okay, good. Yeah, it says recording, Bill, actually in the video side as well. Okay, so what we're going to do today is talk about payroll controls further. We touched on a very simple type of rate-based control in our session previously, not last week, but I think 2 or 3 weeks ago. Today, our goal is to sort of step it up a little bit. So I'm not going to cover the same areas I covered before, but cover new areas. But if anybody on this call wants me to slow down and sort of discuss something that I just glossed over because I presume maybe it was retained in the last session, just jump in and yell at me. So anyway, so we're in Perkins. We're in Perkins test out in the Trucker Cloud. So that's the one I'm using as my basis. If anybody has a different tenant they want me to go to and a different types of controls to look at, certainly chime in. I'm going to start with this one right here, this PT medical, as an example. So let's just kind of double click it first and bring it up the card. Okay, and everything else we should know. Pre-tax deduction, we understand that to some degree. It's a type, and that will affect the basis that taxes will be computed for federal and state, and we'll take a look at that at a later time, maybe today or not. We'll have to see. It's categorized under the insurance category. That's more just for clerical purposes, just to help us organize ourselves. The reporting type is other. That's important. Our choices last time, as we discussed, was federal for FIT, SSER, SSEE, Medicare, and so forth, state tax, local type taxes, and then other. Other is everything else. In this case, it is not of those others, so it's called other. The reporting authority code is called medical. So they called it medical, and then later on it'll get mapped to a vendor. So they're using more of a generic concept called medical as a reporting authority code, and again, it'll get mapped to a vendor later on. So the rest of the stuff can be blank. Post liability and cash, that should be straightforward. We're doing withholding from gross before we get to net pay. Payroll posting group is medical, and that's generally not going to do anything but just map us, if you will, again, to the liability account and to the dimensions. Those dimensions are important. That liability account is important. This expense account is not really used, so that expense account is not relevant. It gets replaced by the expenses, if you will, from the earnings. That's part of what K-12 does. So this value is filled in. It does need to have a value there if it's used as an expense as well. And so it's possible that this same payroll posting group is being used on a different control to do the accrual side, the employer portion of medical. Don't know that for sure, but that's kind of what that implies to me. If it's purely a payroll posting group connected to a withholding deduction, then the liability column is the only one you care about, as well as the dimensions. That's all you care about. Earnings makes no sense. There's probably no reason why ever the earnings bucket should be filled out on the medical payroll posting group. It is not going to hurt anything, just not relevant. Not sure if this expense one is relevant. Okay, just kind of covering that. This all stuff is normal here, nothing unusual. So everything's pretty much normal. So what we're doing is we're going to go now to the key area where we're going to spend most of our time today, which is the calc method. Calc method is actually telling the system how it is calced. It's how the mathematics works when it's actually being computed within the payroll calculation process. So the effective date is blank, which means it's the first one that anybody's ever done. It's using bracket rate times union rate ER. So I'm not sure what all that means, but that's what that says right now. We're going to explore the steps. That description, again, which is entered by a human, they can type in anything they want, but we do advise that you try to summarize as concise and clear as possible how it works. And so that's, again, probably reasonable, what's been put there, but we're going to take a look at it. I do find that people often copy controls from other controls, and they don't update this. And so when you actually look at the steps, you go, that's not at all what that description is describing. So I do advise that you circle back. It's not that it matters. The system doesn't really care. It just cares for the administrator of the system 2 years from now when something comes up and they're trying to morph it and do something with it. It's then they go and look at it that they get confused and they don't understand what they're looking at, and it just causes possibly an issue. So we'll go ahead and hit steps. Okay, the steps come up now, and these are showing all the steps that have been added into this particular control. Again, you see in the banner, it's still PT, medical insurance, so it always tells you where you're at. That's important so that you don't lose track, since the way these pages open up sometimes, you'll see what's behind it. These first four we talked about last time. They're very much a set of four that simply check to see if there's any earnings in the batch for this employee, and if not, it aborts. So the first four really are just, I see them as a set of one, which just happens to be 4 lines that it takes to do that. We're simply looking, and we talked about it before, it basically, and we'll just read this, it takes the adjusted amount and increases it by base amount, and let's just take a look at this base amount now. Okay, and then we're going to go to navigate details. And this is a huge screen. I'm not sure why it needs to be that huge. Okay, so base amount is 2 and 3. We talked about this last time. That type filter or pre-tax deduction, you just saw that earlier, that's a type 8. 2 and 3 is earnings and bonus. And the way we know that is we just count from here, 0, 1, 2, and 3. So what the system is doing basically is it's looking for earnings and bonus. There's no other filters. They're all blank. So basically what it's simply saying is go into the journal and stick into the adjusted amount in this calculation all the earnings and bonus data that's out there for this employee. It then says throw the exception flag if the adjusted amount is 0. So raise the exception flag if adjusted equals 0. Then it says stop the calculation if the exception flag has been raised. So the exception flag can be used in a calculation further, or it can be used here to actually abort the calculation. This will actually abort the calculation at this point. So this is through the third one, it gets aborted. The reason the 0 adjust is there is that if it's not getting aborted, you just want to blank it back out. So when you get to this line of code, nothing's happened. It's just continuing the process. Everything else, all my little cursor values, amount, taxable amount, temp amount, and adjusted amount are all 0 at this moment. I'm starting from scratch, but I am now going to process because there was earnings in the batch. So that's, again, what the first 4 lines does. And you'll see lots and lots of deductions and accruals like that. Okay, so what that means is that the deduction is not going to happen if they have no earnings. And sometimes that's not the right answer. And we talked about arrears last time, and I talked about possibly a future session where we can get into sort of a setup and management of an arrears situation. That means that, hey, you don't have enough earnings to support this deduction. You're going to have this deduction anyway, and you're going to owe me the money, and when you start working again, you're going to pay that back. That's what arrears is all about. And so this example is they're not going to have the medical deduction if there's actually no earnings, and that's maybe not the right answer. So you have to interview your client and discuss, what happens if the employee does not have earnings. And again, this is not really applicable to these substitute teachers, the per diem type people. It's really more about probably like an hourly worker who just didn't work, but yet you're still on the medical insurance. Do you want to still have that medical deduction and then recoup it later when the person comes back? Okay, so let's just talk about this one right here. This one's a pretty powerful deduction, or excuse me, method step right here. This one's called amount is deduction. It's used a lot in our system. Okay, and what it simply says is amount is minus bracket amount using filing status. Okay, so that one is like, well, what the heck are they talking about? So what they really are talking about is it's saying use the other auth data based on filing status as determined by the reporting authority, figure out what bracket amount there is, and actually what you don't see here and what it does do, and I'll just tell you, is and also prorate it. So if the bracket amount is presumed to be an annual amount, it knows the person is going to be processed on a semi-monthly, bi-weekly, monthly basis, whatever their pay cycle is set to, and it's going to divide that annual amount by that number, and it's going to change the sign. Okay, so when I say it says amount is minus bracket amount, it means it's going to be positive bracket amounts, let's say $8,000, divided by 24, and then it's going to put a minus sign in front of it. And it's going to be going to the right line based on whether they're family, single, whatever. So that's kind of what the amount is deduction is based. We do have other ones that don't do the proration, but rather just take the amounts in the brackets and actually just use it literally. So, and I don't know which one it is, amount. Whoops, oh, I didn't want to do that. By the way, that's a problem with this system is that I've just made a change, and it really changed the system. So I could have probably aborted there. Let me just try this, by the way. See, I did that. I'm going to hit the escape key. Okay, it worked. So I just want you to know that. If you do that like I just did, and you just accidentally click that, hit the escape, and you should be back to good to go. So just a warning, if you're in here and you don't hit escape, you tab through it, it's changed. And how do you know what it looked like before? So that's why it's probably, if you're really thinking about making real changes and really fiddle around, maybe it's better just to simply copy it. You know, I'll just say, a 101, just to get a copy out there. Okay, and I'm just going to just say copy right now, just for my own education. And I'm going to work on that one. So I just want you to realize that now if I blow it out, all I have to do is just play with it, test it, whatever, and then just delete this if it was just for play. Maybe I'm just academically trying to play with this. Again, we're in a test system, but you could be doing this in production as well. So you do have a way to back out, but you don't have a way to back out if you're only on that real one and you really change it, and you really get out and you don't know about it, and well, you really have changed it. You can set up the change log for this table so that for any changes it gets recorded in the change log. That way you could actually examine the change log, find out what the old value was, and get it back. So that is something that you could do. Or just test the change log and say, give me all changes on this table. This table right here, just for anybody that wants to know, you can always find out what the table is on any screen you're ever at. Really simple. You just simply click up here, help, about this page, and it goes in. It says here's the page name, but more importantly, the source table. So there is the table, and there's the number, and you'll need that number for the change log, 3703-2350. Another item for training down the line is change log. I don't know how much you guys know about change log, but we certainly can put that on the agenda. I'll write that down myself. I'll say change log. Because if you guys are totally up on changelog, that's great. But if you want a sort of a primer on changelog, there's a lot going on. And within changelog, I'm happy to, probably not a whole session, but certainly a half an hour of changelog. Excuse me. Amount is deductions. So the bracket type, as soon as you click on this, and let me just kind of put it in again, just to see what it does. So if I do, and I put it in again, notice the deduction type fills it automatically. Okay, that deduction type code, when I click on here, will filter and only show me bracket types that are type deduction. And so what I first want to sort of say is that bracketed base steps that use brackets. And how do we know steps use brackets? So if I come into the advanced section of steps, if you notice, there's a thing where it says bracket, and let me see, hold on. I think it's uses base amount, bracket type code. I think it's really more about this. If I were to filter that field and say, give me all the values where this is filled in, these are all the different steps, if you will, that potentially use brackets. You can also see that there's different types of brackets. There's deduction-based brackets, there's exemption-based brackets, there's limit and tax percent. Some of these stuff is all part of calculations. Quantity-based, I'm not even sure what this is. I think it's quantity tier. Quantity tier, tax credits, withholdings, different kinds of brackets. The bracket table has many fields in it. So the type of bracket really is just saying which fields is it paying attention to, the percents, the amounts, the quantity. There's different fields when you go see the brackets in a few minutes. And basically, the type of bracket tells the program which fields it's really paying attention to. I mean, that took me a while to sort of realize that, but that's basically the difference. Okay, I'm just going to delete this line. Okay, so amount is deduction. The deduction type is, the bracket type code is deduction. Somebody's picked in medical, and this track filing status has been checked. So if what I want to do now is I'm going to close this screen completely. We're going to go look at brackets for a few minutes, and we're going to look at this particular one. I could, of course, get to it in the advanced mode now, but I kind of want to show you what it looks like from the main menu, just getting into it from the administrative side. And then we'll come back and discuss this track filing status. So I'm going to close this all now up. Close all that up. We're going to go to administration into the calculation area, and there's brackets. Okay, so you can just type brackets, but I kind of like to go from here. All right. Here it's going to be purely sorted by code typically. Obviously, you can limit yourself to just deduction types. I'm just going to head down to one called medical. Okay, and notice right here we already have sort of a discussion, which is a good discussion, which is simply to say, hey, you know, the blank effective date means that's the beginning sort of version of this bracket. And then somebody used the copy button. As you imagine, there's copy buttons everywhere in this payroll system. They copied it to 6.1 and probably changed the rates. People say, okay, my medical rates, my dental rates, my vision rates, where do I go and update them each year? This is the answer. You go right to these screens here. You would say, go to this one right here. You would copy. I'll say 060115. I'm just making that up. Okay, there's that one, and then you go into the details and change it. You never just change values. I mean, unless you're setting up the system for the first time, you made a mistake. Fine. But if it's actually more about just going to the, setting up the deduction amounts for the next year, you want to always use the copy. So you only change the amounts the first time when you're doing it for the first time. But from that point on, if the rates are new, you're always using copy. Always using copy. Does TRECA support team need to do this for their clients? Absolutely not. You should be training your clients on how to do this. And that's an area that I think they should know how to do. How to go to the brackets, how to hit the copy button and put their new rates in. And hopefully do a test, see, make sure everything looks good. I'm going to go ahead and delete this line right here. Okay, so when we go into any of these, you can get into the details, which is right here, navigate. So when I click on the details, somebody has set this up with different rows based on different filing statuses. Okay, so I want to actually, believe it or not, back up again. I know I'm kind of frustrating you, but I want you to know how to get the filing statuses in, because if you don't know how to do that, then this part doesn't really make a lot of sense. You need to know that, because when I look at this lookup list, it just has those. Why does it just have those? How does it know that? I don't understand that. We need to know the answer to that. So we're going to go back out a little bit, back to this screen again, and we're going to talk first about just filing statuses on their own, which are right here. So this is kind of like the rate table, which is that they're just all just free form. They're just out here. And so it's like, well, that's interesting, but how does it still connect it? I don't understand. What's the connection? So you have to first enter it here as a code, and you kind of just have to use your own coding structure. It doesn't matter, because nobody ever sees it like this. This is just for us internally to see these lists right here. Then you connect it to the reporting authority, and that's the key part. So when we go to the reporting authority, we go find our medical reporting authority, which I'm looking for right here. Then there's an option called filing statuses, and don't ask me where that icon came from. I have no idea. Hope I didn't make up that icon, but anyway, and there it is. So here is where somebody has entered in the acceptable filing statuses for the reporting authority of medical. Okay, so that's why that lookup is limited. You got to go to the reporting authority, set up the filing statuses, and then back to bracket. So it's really, you can't really build your brackets until you've built your reporting authorities, assign it to your payroll control code, set up your filing statuses, and then connect which filing statuses are appropriate for this reporting authority. And again, this only applies if you have a deduction that is filing status based. And we see this both in tax auth and in other auth. Tax auth, federal and state, married, not married, but married, single, so forth. In medical, it's obviously similar but different. So we'll go back to our bracket now. We understand that much better. We'll go back to our good friend medical. We'll go to navigate. And by the way, everybody understands that even though we haven't promoted nav details to the home page, you could just customize this right now and promote it yourself. So just so you know, if you get frustrated not having it on your home page, then go ahead and just, simply promote it. So that's more of a user personalization issue. Okay, so on this screen, you got the reporting authority. The reporting authority, when you put these records in, it doesn't know which reporting authority. So even though you know this is medical, every row you have to just go in, put in medical, and ADM EE, and it actually would accept it. So you're kind of going, well, I'm confused by that. Well, I don't have really good explanation. The reality is that it's using, I can't remember what the primary key is. It's using a line number, I believe. So it's wherever you put them is where these things are going to actually stay. Yeah. So you can put it in twice. You can put the amount in twice. I'm not sure what happens. I believe what the system does, it just finds the first one and uses it. So obviously don't do that, but I just want you to know that it's basically kind of the order in which you put them in is the way they're going to appear on the screen. So I talked about sort of the different types of brackets, and that's kind of what I'm saying. So I think even the system has got other fields. Yeah, there's a bunch of fields you're not seeing. So if I could kind of just move this down a little bit, notice that the percent, but tax over you're not seeing. You're not seeing maximum withholding amount, rate multiples, lump sum. Well, you are seeing lump sum. So you're not seeing, though, all of these interactively because the system, this page, when it opens up, knows this is a deduction type of bracket, and so therefore it's automatically creating which columns it wants to show you, and others are being removed. So if I were to go to, and this is where that deduction goes into play, if I was going to go to a withholding one and look at details, then it's got different columns. So that's something that you have to sort of absorb a little bit, is that these bracket type codes are not just a category label, but they have a direct effect as to what columns you then see as which steps used for which calculation. So, and I know that sounds a little bit complicated. It is complicated a little bit, but that's where some of the power in this system comes from. So I just want you guys to understand that. Let's go back to medical. All right, so what they've put in here is, and again, I don't really understand this, ADM probably means administration, so I guess they're just, they're offering, it looks like to me, the same rate, whether you're administrative or certificated, and then classified has different rates. Classified pays a little bit more than the certificated and administrative. And I don't know why administrative and certificated are separated since the amounts are the same. Maybe they weren't the same last year, or maybe they became the same this year. Let's just take a look. No, they were. So don't look at me. I have no idea. There's probably a reason why that was meant to be separated, probably for reporting purposes or so forth. Okay, so keep in mind these are annual amounts. Annual amounts, just want to make sure you understand that. Also, a little trick of the system is I can go ahead, I'm just going to put this in manually. You may have in front of you just the monthly amounts. So you may just type in, 952.45 times 12, and it will calculate it for you. So every decimal cell in this product is also a calculator. So you can simply use it that way and not bother to calculate it separately on the calculator, because it is a calculator. So I just want you to know it's a little trick of the trade. I'm always happy to impart those to you. Okay, so that's how you set up a bracket, and that's, again, a simple with deduction-based bracket. We're going back now to our payroll control. And gosh, I wish it came back to the same place I was at. Never know why it doesn't. Used to in the older versions, but all right. Let's see, medical. Okay, I'm just using the one I was playing with. Okay, so now we understand amount is deduction. Simply is going to say, go ahead, again, take the bracket amount. So it's telling you which column even on that bracket screen, the amount. It's going to go ahead and prorate it. So it really should say amount is minus prorated bracket amount using filing status. That would have been a little clearer. I think they've always assumed that everybody would know that. I don't think it's that obvious. So anyway, but that's just the way it reads. It's been like that forever. Okay, so now the system can automatically, based on the fact that there is a deduction, a filing status. I guess one thing I want to sort of state right now before I go to the track filing status is that it's a little bit of a gotcha. And we talked previously, I believe, and somebody chime in if I'm wrong, but we talked about how we don't activate the payroll controls until somebody onboards them, which means they put in the other auth, they go ahead and put in medical, they put in ADMEE. The system then automatically activates that control. So once it's activated, it has to have a filing status. So, and I want you to know that we do have an amount is deduction, I believe, that, whoops, let me just try to, yeah, I feel like there's one that we've done that allows a zero rate. In other words, doesn't, now actually I think this one I do know what it does is it automatically will fail. So I just want to make a point that this one fails if the control is active and the employee does not have another auth value. So I just want to be clear that when you're using this amount as deduction, it's all fine to use it. We don't activate it initially as the controls sort of drop it on the employee's card. Then as you put the other auth in, it activates. Life is good. But if let's say their spouse now is going to go ahead and use their insurance for the spouse's job, and the employee is opting out, it's it's required that you do a couple things, but you don't want probably to just blank out the other auth record because you kind of want to see the history. You want to not lose that. So you kind of want to leave it there. You would just want to unactivate the control, I think is what you're going to want to do. My point is if you try to do the opposite, which is leave that control active and then just delete the other auth record, you will get an error. You won't get an error. It'll let you do it, but you'll get an error when you calculate. Because the system is going through, sees it's an active control, doesn't see the other auth, and that's an error, okay, when you're using this amount as deduction step. So I just want you to know that. Track filing status. So that's an option that K-12 added years ago. That's become very helpful. What the system does basically is it then will go ahead and put into the payroll journal line, into the payroll ledger, that filing status. So if they are family and they process 12 cycles as family and they switch back to employee, then we'll have a separation as to which records were calculated with filing status of family versus employee. One thing to note is by using that, and by setting a plan year with the reporting authority, you can use the medical worksheet to go ahead and basically when the person changes statuses, the system can go out and for the rest of the year compute exactly what difference is in terms of whether the employee owes you money or you owe the employee money, relative to the effective date of the status change. That's what that worksheet does for you. It only can figure out what really was withheld properly under different statuses because we're tracking that filing status. So you can't really use the worksheet effectively unless you're tracking the filing status. Beyond that, you just want to track the filing status. You want to click that checkbox anytime you're using a filing status. So that applies to your FIT, your SIT, anywhere where people have to go in and put in a filing status to set up a deduction. You want to be able to track that filing status. You want to check this checkbox and on this line. Okay, if I did this, that would, well, it's not going to let you because it's checking to make sure that there's a bracket type code, so you can't really do that. But my point is you really don't want to do this. That's what you don't want to do. You want to have it checked. Okay? All right, so the system now has computed the amount of the deduction. However, there's another line. And so we want to now explain this sixth line out there, amount times union minus percent. So what does that mean, and what the heck are we doing? So now that I'm thinking about that, I'm realizing that those amounts we saw earlier, those annual amounts, are the total premium amounts. That's not the amount of the employee's responsibility, but rather that's the total premium amount. And again, most districts are self-insured, but they still have some value that they use for these type of calculations. That was probably a total premium amount. And so then what we're doing is we're further now multiplying that premium amount by a percent, depending on what union code has been assigned to that employee. That's what this one is. And let's just take a look at the description. Amount is minus amount times 100% times 100% union percent. Yeah, I'm just not sure what that. Oh. Okay. So the fact that that one's been picked is kind of unusual to me, because that's the one that's usually picked for the employer, and this is the employee. So to me, based just on this analysis, it's not the right one. However, it depends on what percent you put into the system. So I suspect that what we've done is we've flipped it, and that the percent we're putting in at the union level is probably the amount that the employer is paying. So let's just take a look. Let me see what this description is here. Yeah, union medical board percent. That's right. So what they did it kind of the opposite of the way I normally thought it would be done, but this is fine. This will work fine. So what we're doing is we're saying, okay, the board is paying 50%, or let's say 60%. So the board is paying 60%. This is taking the reciprocal of that. So 100 minus that. So if this is 60%, then this is going to result in 40% of the number that we computed above that. It's going to be multiplied and reduced by. So let's stop a little bit and go take a look at this particular union percent. So union medical board, let's just kind of take a look at that code. And we're going to close this now. And we're going to go to HR. We have to travel to HR, because I think in HR is where the union codes appear. Yep. All righty. Holy cow. Got a lot of different unions. And again, are these really unions? No, these really are classifications. I think, Dan, are you still there, Dan? I don't know if Dan is still there.
That's crazy, isn't it, Andrew?
Well, I don't know, what that is. I mean, again, let's just take an administrative person. So we take admin and we look at rates. This is where the rates live. And so that's the union medical percent that we were just looking at earlier, and 89% is the number that we see there. So that's simply saying that the board has decided to pay 89% of the medical for people that have this value, if you will, on their employee card, that have this control enabled, that have a filing status. And that sounds convoluted, but that's basically what it is. So we have a lot of them here. Board paid health.
The rest of those union codes, that district that you happen to be in, they prorate their employees by the quarter hour. So depending upon how many hours that employee works decides their premium for the month.
So 14% for this one.
Yeah, that would be a classified 2.25.
Yeah, I see. Yeah, you can see what's happening. The percent is creeping up as we work more hours.
Yes, sir.
Yep, I get it. Hey, look, it works, I mean.
I know.
This is a funny thing about software, you know what I mean? It's like when it goes out of the factory, people use it in such creative ways sometimes. We go, holy cow, that's interesting. But it works. I mean, hey, it's a way to solve the problem. The benefit, of course, is that, as long as these percents hold, then all we have to do is once a year change those total premium amounts, which takes us about, 3 minutes to do. And voila, the system is completely recalibrated for next year. Obviously, if those percents change each year, 100%, let's say the board says, okay, this guy's now going to be, 48.37, obviously you have to change these. Now, even in this area here, I would advise that you would do something like this. You know what I'm saying? I would do that. So that, you know, you have the history. People want to know what the history is. And this system, by the way, if you put that effective date in the future, it will not kick in until that time. And again, it's against posting dates. So when you put effective dates, think about check dates when you want to actually, which check do you want to begin to use the newer rate. So you can get this stuff off the desk, process it, and then voila, the system will just take it from there. Plus you have the audit trail. So that's kind of the way to rock and roll on that one. So yeah, so this is interesting. This is an area that K-12 enhanced the system. This out of the box, this union table was just purely just demarcation. It had no functionality in the system. But we added the rate table to it, and then we added the step, or two steps, if you will, to do this. And it really has been good for several different types of districts. So more than Ohio is using this kind of capability. So it's worked out well. But so that, and the idea is, again, to be as leveraged as possible. Now you can see here we also do get in this screen right here how many people are there. So I think you can click on that and see the 4 people. So they got 3 of them that are active right now that are within that classification. 36 here. No insurance. Okay. Now here's probably no rates, right? Now it's interesting when you get to the 100% rate. You know, we saw this guy right here. I don't know if you guys noticed that. It's 100%. So again, if we think about our method step, it's going to calculate an amount. It's going to multiply it by 100 minus 100, right, which is going to be 0, and therefore nothing will show up in the journal. So even if it's active, and you need it to be active probably, well, you don't have to have it active, but you certainly can have it active, it still is not going to calculate anything. So now that I've seen that, I would argue, knowing let me go back to payroll, sorry. I'm sorry, I'm going, where am I? All right, back to payroll. That we're using an accrual for medical, and we've got 2 here. I'm not sure why we have 2, but let's just take certificated, and it may be it just goes to 2 different liability accounts. Let me just kind of take a look at that. So that's going to medical. That's going to medical. So I'm not really sure what the difference is between these 2. Just curious. So now we're actually moving over to an accrual. Notice the accruals, by the way, typically start with AC. We do that just to keep them organized. Doesn't have to be that way, but it just seems to be a nice way to do it. Also notice the type is miscellaneous, which is a type 12. So miscellaneous is generally used for most of your accruals. The only difference is other tax is used for your Medicare and your FICA, but Medicare and FICA. All right, so let's just kind of go to the certificated one. Okay, it's the same reporting authority. Let me just again try and find a difference between it. Yep, same reporting authority. So it must be in the method steps. Maybe, maybe not. Let's go find out. So let's go to the calc method. All right. Yeah, and so we kind of understand better the description. Remember on the description it said this exact same thing? Okay, but technically speaking, it wasn't really right. It really should have been EE on the previous one. It's the union rate, or maybe it could be 100 minus. Probably another way to write that. Let me just kind of go over to it and just show what I mean. So let's go back to, where was it? I can't remember what it's called. Was it PT medical? No. Yeah, pre-tax medical, sorry. Yes. So just want to go back to it again. Just kind of getting back to what we said here. So that's really not the right phrase. What the right phrase probably would have been something like, $100 minus the union rate ER. Okay, so I mean, again, you guys can type this any way you want, but you should try to think about making sure the language is correct to help explain, because that's what this really is doing. It's doing 100 minus the ER rate is what it's doing. All right, let's go back up to our medical now. Calc method. Okay, this one is correct because now this one is the one by that rate. Everything is the same. The only difference is this step. This is the same rate code. This is all the same. Everything's perfectly the same. The only difference is that we're using this step now versus the step below it. So the step below it was being used by the EE. When I previously set these up for other districts, I did the opposite. I did everything the opposite. But it doesn't matter. I mean, if the client prefers to go to the union table and ultimately put those rates in to express how much the board is paying, then you just adjust yourself to that. And that's what I guess Dan has done. And so that's fine. That's not a problem at all. So what's nice about this methodology, the way these controls work, is that we're using one reporting authority. We're using the union code one time. We're using the bracket one time. And we just adjusted the two controls, the deduction control and the accrual control, accordingly to work from the same basic set of data, same filing status, same bracket, same union codes, union values, union percents, everything. So minimum amount of setup. That's the art of what we're doing here, is try to figure out ways to get everything satisfied, but with minimal amount of setup, which means there's less to break, if you will.
Andrew, that's the only district we've done that with, just because they were so complex and how they did their medical benefits.
Right. Yeah, often it's just more of a straight bracket, isn't it? You don't have to have the whole percent time the union rates.
Correct.
Yeah, it just works when they have something like that. They throw something at you where they say, okay, we've based on this standard type of medical plan, different groups have different amounts that are paid by the board based on these different groupings. Well, think unions, right? Because then that'll help you, because it gives you the most leveraged way to do it. Because what we're always trying to avoid, the last thing we ever want to do is to do things at the employee level. I mean, whether they're family or individual, but that ratios at the employee level, when then those rates change, well, guess what? It's a lot of setup. It's a lot of management. So I think this is a good compromise for somebody like Perkins, who is asking you for this kind of, had more of a complex medical arrangement than the other districts have. Yeah, when you get to a simpler one, you go, oh, thank God, simpler. All right, let's do a status check here. So, okay, we're still good. 10:50, and we're going to 11:30. So my question now is, Dan, I don't know, are you still there? Or are you gone?
I'm here.
Oh, you are here. So the one that was to the limit, the dues, was that in Perkins?
I thought that we had set up a limit on PEA dues.
For what? What did you say?
PEA dues.
PAD?
P as in Paul.
Uh-huh.
The after-tax PEA and ATPEA balance, I thought.
Right. So I'm looking at Perkins educational dues, and what you're saying is that if I look at it, yeah, but I don't see it stopping. You know what I mean? It just says amount is emp rate negative amount is all it has.
Okay. Perkins may not. I thought they had a control out there with a balance on it.
Yeah, because usually it's going to be a BAL control, have BAL as the first three letters, right?
Right. Is it OPSE, OAPSE, OPSE or OPSE, whatever they call it?
After tax? Well, let me ask the crew on the phone then. Tell me another type of deduction you want to look at. And maybe if it's a different tenant to look at, let me know who it is.
Fringe.
I think they're talking through their laptops, which is why it's sounding so terrible.
I'm sorry. Can we look at a fringe?
Yeah, okay. Like which fringe does Perkins have fringes?
Oh, yeah.
Okay, let's take a look at fringes then. Let's take a look at fringe. Let me see. I'm trying to figure out what fringes we got.
I think they have a Medicare fringe, if I remember correctly.
Medicare fringe? They have GTL fringe, of course.
Yeah, let's look at that one. That's fine.
Okay. All right.
If you don't mind, we can look at this and then how to tie it back to the tax form. So if we can kind of go through that stuff because we're looking at W-2 season.
Okay. All right.
Thank you.
Okay. All right. So GTL fringe. Fringes in general are compensation that is taxable to the employee that are not actually being paid in real dollars. they're being paid in other ways. And so that's all I'll say there. And so what we do typically in the way we set up a fringe is that we actually give them the fringe as earnings, and then we deduct it right back out. And it's important that the earnings then be seen as taxable. At the same time, we don't have to connect a job to them because most earnings are connected to jobs. So it's important that we kind of have the fringe earnings come in, not have to worry about it being connected to a job, and then have a deduction. And then how does that get picked up on the tax basis? So we'll look at that as well, and then we'll look at the tax form codes, which could be a little bit beyond in today's time frame. So that's the only thing about that. We may want to also go into maybe a much more detailed dive into the tax form setups. So anyway, the GTL fringe. So here we have two right here that are a pair. I happen to know they're a pair. I can see these are a pair. The gift cards are a pair. And there may be others around here. So what you first have to understand is that they need to be in the master calc order. They both need to be in the master calc order. Doesn't mean that they're both turned on, but they need to be in the master calc order. Those controls need to be in the master group and on the employee's card. Probably inactive and then only activated based on other things that we'll talk about. So in the fringe earnings, what we can look at is first let's look at the card itself. Everything else is pretty straightforward. Posting group is going to be GTL, and it's probably going to have an earnings amount put in here. And again, it doesn't matter what it is, it just has to have something there. And these codes here probably are important. You're probably going to have to put in those codes. Those codes are really important because in this situation, it's not going to be able to get it from an allocation from a job. The reason it knows not to do that is under the K-12E section, there'll be an area that says do not use allocations. That's important to be checked. So you want to make sure that your fringe earnings, whatever the fringe earnings is, do not use allocations is checked. Okay. Furthermore, back up at the top, when it comes to the category code, in the category code advanced section, we're using fringe, and we also have a checkbox called fringe earnings. Where that comes into play is on the K-12E test report, the standard test report in the payroll journal. It can separate real earnings from fringe earnings in totals and so forth on the report, but it doesn't know how to do that unless you've checked this checkbox. So you do need to have this control under a category and under a category that has fringe earnings checked. So this one you can see is done that way. That's another important piece. After that, the last piece that's important is to go into the method steps. So we'll go into our method steps. Use employee rate per cycle is what it says, and amount is employee rate GTL. So it's just simply having used a rate code called GTL, and GTL is group term fringe amount probably, yes, per pay. So that's an amount. Okay, now again, I don't know how much you want me to explain group term life. I will just real quickly, is that group term life is based on a IRS schedule that simply says that if the company pays more than $50,000 of life insurance for the employee, there is a factor and a computation to determine how much is considered to be fringe earnings. There's a benefit that the employee is getting by, if they were to die, their family would get more than $50,000. They consider that not to be. There's no real business reason per se for that. It's different than if the company got the benefit, but if the employee's family gets the benefit, then that's considered to be a fringe benefit of in excess of $50,000. We have a program that I'll just kind of point to. I'm not going to get into it a lot, but in the administrative area, group term life setup, this table hasn't been changed in 1,000 years. It's pretty much the protection cost per month over 50K. And furthermore, we have a task that built into the system that allows you to go through a calculation once a year. It'll run through and compute people that based on the policy. You have to know what the policy is. Again, the employees usually will have policies. This group of employees, they'll pay one time their salary multiplier, 2 times, and so forth. And based on those kinds of answers, the system can do all the computation and create the rate code and put it out there for you on the employee's card. So I'm not going to get into tremendous detail to run this, but just suffice to say that we have the computational ability to actually figure out the GTL amount. As it's put on there, it then activates it automatically for the employee, and it's up and running. The deduction. So let's just deal with the deduction. So any time that you have, hold on, where am I at? I'm sorry, I'm in the wrong section. Okay. All right, so we talked about the earnings side. So let's go GTL again. Sorry. Actually, I think I'll just type in GTL. Okay. So the fringe earnings. So basically, what happens is an employee rate that gets out there by some some mechanized way to do it. Sometimes it's personal use of auto. Sometimes you want to do it at each pay period. Sometimes you want to do it once a year. There's many ways to handle this. We can kind of talk about that, as needed. But either way, the earnings, the fringe earnings, pop into the journal an amount. This deduction is automatically designed, and again, this is a simple deduction. Just keep in mind one big caveat, which is that this liability account be the same as the earnings account. So for those accountants in the room, since the earnings is using 0239, the deduction is using 0239 to the same codes, you are basically creating a wash entry. So it has no effect on their general ledger. Yes, it is going through their general ledger, but it's having no effect on their general ledger. And obviously, you don't want to set up this reporting authority. Well, this doesn't even have a reporting authority, so it couldn't even go to the vendor side. So that's all good. But let's look at the calculation, which is obviously now important. Use employee rate per cycle. So actually, it's really fairly simple. This is interesting because I don't think the earnings one had this. So let me just confirm. I think we got a discrepancy we just noticed, but I could be wrong. Yeah, it's the matching game. Yep, it didn't have it. So for those people in the crowd that have been paying attention to what I've been saying, does anybody sort of see the problem with having the fringe earnings not test for earnings, but have the deduction testing for earnings? Does anybody see the dilemma with that? Anybody want to answer that? Anybody? Even K-12 people? Anybody? Nobody wants to raise their hand? All right, I'm getting quiet.
Ask the question again.
Why is it problematic that the fringe earnings is not testing for any earnings in the batch, okay, but yet the deduction is? So let's take somebody who has, it's a rare situation, but they have a employee rate code for the GTL on their employee's card. They have no earnings in this batch. What's going to happen is that the system is going to go ahead and give them the fringe earnings and really pay them the fringe earnings. It's going to actually cut a check for the fringe earnings because you're not doing the deduction. Actually, I might take that back now, second thought, because the fringe earnings actually would be considered within the scope of this. So it would actually put the deduction out there. So now that I'm thinking about it, actually what would happen is that if they don't have any earnings in the batch, you're actually going to get the fringe earnings and deduction and presumably zero net pay, which maybe is okay, So anyway, just a little nuance there. You can go ahead and mute yourself again, but it was it's actually interesting because actually when you think about it, what's going to happen is that when the deduction comes along, it's going to see that the earnings is actually there, and therefore it'll continue to process. It'll put the deduction there. Net pay will be zero, and our system will process that all the way through. They will then get, well, let me think about this. Hold on. They're going to get a negative check, aren't they? No, they're not going to get a negative check. Yeah, they're going to get a negative check. Yeah, they're going to get a negative check. Yeah, it's no matter what, it's problematic. I mean, you're going to get a negative check because you're going to end up getting the federal withholding, or you're going to get FICA at least, and Medicare. and that's going to create a negative net check situation. So I guess the bottom line is you really don't want an inconsistency between the way you attack these fringe controls and the deduction controls. So my guess is it's actually like that now in your live production databases, and you should take a look at that. I don't think you have to make a decision, but whatever the decision is, it should be consistent, I suspect. Okay, amount is temp rate, negative amount. We understand the rest of that, I'm assuming. So it's just going to do the deduction, simple as that. And so they don't get it in their paycheck, but they get taxed on it. So now let's switch over to taxes. So let's just start with a way to look at this is let's just go to FIT. Okay, so let's go to FIT. Let's go to its calc method. Let's just go here. And this is a complicated one. I'm not going to get into all of this. By the way, notice this comment area. As you're building controls yourself, you can go ahead and write your own comments. Sometimes it's very helpful to do that. This one doesn't test for earnings because, well, if there's no earnings, it's not going to be any anyway because it's a percentage-based kind of calculation. So it's kind of automated that way. Okay. But the key thing to really understand is this base amount right here. Because people say, okay, what is going to be included in the base amount for FIT? Then you need to understand that this base amount code is what you need to focus on. So I'm going to go ahead and just to kind of leave this screen a little bit, I'm going to put this in my copy buffer. All right, and just so we see where we get to in the system to this information, we're going to go to calculation, base amounts. Okay. Whoops. Oh, shoot. Earnings, bonus, and pre-tax shows me no data. Does anybody know why I'm getting no data? I know, James, you know the answer to this question, but anybody in the house know why you're not getting any data? And just to save you the answer, I'll tell you why. Because the actual code has got pipes in it, and pipes have meaning in terms of filtering, as you already know. So the system is getting confused. It's looking for codes that are earn or bonus or pre-tax, but it's not looking for the combination. I don't know if I can actually even figure that out. So again, what I'm going to do is I'm just going to go earn, and then we'll go earn bonus pre-tax. Earn bonus pre-tax. This is the one I wanted. Okay. Anyway, so here you got a code as a description, but the key part of this is under the navigate under details, and now we need to study this and see what the heck it's doing. So this is, in essence, taxes from a federal perspective. And actually, it's nothing to it. It's 2, 3, and 8. So it's simply saying that all earnings, all bonus, less pre-tax deductions. So even though it's 238 and that seems additive to you, remember the sign for pre-tax deduction is negative. So if the person has $100 of earnings and $10 of pre-tax deductions, since that $10 is a negative, it actually sees it as $90. So box 1 on your W-2 is coming from this base amount right here. That's where it's coming from, to make it as simple as possible. So if so when people say, well, is the fringe in or is it out or whatever? Well, is it earnings? Then it is. It's that simple. Okay. Let's take a look at the FICA. Let's go to payroll control and let's go to FICA. Maybe not. What's it called? SS. Sorry. SSEE. Okay. Now this one's a little bit different. It's been written in a different way, but basically pre-tax deductions, it reduces total gross. Okay, so this one is doing earnings and bonus. Let's just kind of look at earnings and bonus. Okay, 2 and 3, no filters. Okay, so it's all earnings and bonus. Less pre-tax deductions. So now it's done differently. And we probably can already maybe know, for people that understand how the taxes work, retirement can't be included in the list of pre-tax deductions that are reducing out of earnings and bonus. You can't get a deduction for paying retirement to reduce what you pay into retirement. if that makes any sense. So if I go look at pre-tax deductions, and I look at its details, we should start seeing some filters. There's 8. Okay, so this is an interesting way to do it. So the control filter is not equal to anything that has ANN in the first 3 characters in the control code, and also any single record in the payroll journal that has a retirement code category filter filled in. That comes in really, quite honestly, from the earnings record, which comes from the job, which comes from the payroll job. There's a retirement category. So you guys must be using retirement categories in Ohio. Let me just take a look up here. And these all should make sense. So basically, the only objection I have for this is it says quote, quote. Well, it said quote, quote. So it's empty. It means empty. But you had a none out there. So again, I don't know. I know Dan's dropped off at this point. But you had a none out there. So if you had a job that says there's no retirement on it, it's called none, then quite honestly, you do want it to be FICA to be computed on it. But the way this is written, it's not going to be, which is not good, I would think. So I'm just putting that out there, that if you have a job where actually none is being used, and you think that the FICA is going to be computed on those earnings, you're mistaken because of the way this is set. So another way to maybe process this would be that blank, something like that maybe. And you could test that, of course. So that would say, okay, if any earnings has a blank value and also can be a none. Actually, I don't think you can do it that way, because the problem with this is that you don't want to do it on the same line. I don't think. Let me think about this. Yeah, no, I guess that would work. No, I guess that would work. Yeah, I think that would work. One thing to note is that you just need to test this stuff out. I think that would actually work correctly. I'm going to go ahead and put it back the way it was. Okay. So that's why the FICA one is different than the federal, because federal, you're allowed to take that retirement as a reduction in your basis. You can't for Social Security and Medicare. Also, you should be careful to make sure that you're the same on your SSCE, SSCR, Medicare EE, Medicare ER. We've had a lot of people just not have the right base amounts. They pick different base amounts, and they're wondering why they're slipping. They're not the same. Not computing the same value. So it's really important that this is all the same. Okay? By the way, there's a different kind of bracket now, limit and tax percent. So that's a different kind of bracket. We can go to the advanced on that. We can go to the latest one. And details. And there you go. One of the things that we do provide as a tax service is the updating of that limit each year. So that's something that we do. All right. In terms of the tax, the W-2 codes and so forth and so on, they're all hung off the controls themselves. So like an SSER, if I click in Navigate, then that's where the tax form classes will appear. And then this is a 941. I think this one's going to be W-2 and 941, right? Because the ER appears on the 941, but it doesn't really appear on the W-2. This one does appear on the W-2. So these are the codes that tell the system where they go, but it's a little bit more complicated in the sense that it really needs to be updated through a tax service. This stuff is real finicky, and sometimes we have had some problems with it. We've recognized the problems and updated your systems behind the scenes to clear all this up. So you should be able to. I think the key thing is printing 941s, printing W-2s. Do you have any problems? Everything look good. If not, then let us know, and we'll walk you through it. The medical stuff is different. So let's see where your medical, STRS board. I'm not sure if that tax form class is filled in. Yeah, there seems like it's filled in. It's 12E. Defer comp. Yeah. So that's, it's really these tax form classes that are hung off of the controls that's going to drive the W-2 and 941s. So I'm telling you that much without getting into tremendous detail about it right now. There is another way to look at them, which is to come over here to tax forms. W-2. These are all the classes, basically. These are all the buckets and so forth. Yeah, why some are blank, and I'm just not sure. Sometimes what I find is that things change in the software, and this is data, and the data gets out of date and it's not been cleaned up. So these blanks, typically I find the blanks are ones that aren't used anymore, but I just hate to tell people just delete them until somebody analyzes them. All right, so tell me what other questions you guys have. I mean, I've gone through a few types of calculations. We talked about fringe. We talked about tax form classes. We talked about brackets. We talked about base amounts. Give me something else that you want to talk about, or we could close up early. Anybody on the phone? Christina, James, Bill, everybody's muted. But Heidi, I see you're there. Anybody want to talk about anything?
If we have some school districts who their dues, because they can count them on their taxes, we would go to those then on the pay control and go to that navigate and tax forms and tie them to that certain box then.
Well, explain to me these dues. They want the dues on the...
Yes, like teachers' dues, they can count those off on their taxes.
So they just want them to appear, basically, right?
Yeah, they want them to appear as information on their W-2.
Yeah, well, the first thing to do is to just see on the W-2, going back to where I was, do we have a bucket already for, do we know what kind of code, they want it in box 12 or box 14, do you know?
I think, like the district I was from, we always used to put it in box 14. Like
14.
You see it in
Okay.
box 14, yeah.
Okay. Yeah. So here's where you can see kind of how you do it, because you can just create a new 14 record right here. You know what I'm saying? Like somebody created this record. And so that code, the LST, is the way it's going to appear. So if I go here and go 14-do, let's say dues.
Okay.
Dues. And I'll just say, you know, teachers' dues. I don't know, what do you want? Well, it doesn't matter because this is all just...
It's union dues because it's going to be both teachers and, yeah, that'd be fine. Thank you.
Okay. Reversed payroll amount. So here is the value you're interested in the payroll amount or in the taxable amount. In your case, it's going to be in the payroll amount. The reporting authority, federal, is automatic because it's just coming to a W-2. It's kind of connected to the W-2. So that's fine. You can leave it that way. Federal doesn't mean you're reporting to the federal government. You're reporting it on the W-2, which is a federal form. You know what I mean? So that's kind of why the word federal is there. So once you've done that, then you just simply go to the payroll control at, you know, you're interested in. And I don't know, do I have a union dues here? I don't know if these are United Way. You know, what are they called, these union dues? Does Perkins have union dues?
Yeah, OPC or PEA. One of them is ATPEA, I think. Yeah,
right,
that is.
Right. So then you would come in here, you go navigate tax form classes, you go here, you pick W-2,
Okay.
you then click on here, and you find the one you just put in.
There you go.
Okay, and I think that's it. I don't think you fill in anything else. I mean, that's good enough.
Okay.
And so that's it. You're done. I mean, it just will show up on the W-2 now in box 14. And the system automatically will use multiple pages if they fill up. I can't remember what the number is. I think it's like either six buckets on 14 or 4 on, I can't remember what the total is, but then it just goes to another set. So, you know, if they do have like everything under the sun, then it's fine. The system understands how to deal with that and will handle it correctly. So, yeah, that's it. I mean, it's pretty much that simple to get it. And what I love about it is that I don't have to do it like while it was processing. I can do it at the end of the year during tax season. And I don't have to like capture it. I missed it. I didn't capture it. It used to be back in a very early version of our system. We had to go back and fix the data because it came from it was stamped in the data transactions. This is now stamped just on the control, so therefore you can fix it in 2 seconds and just rerun your W-2s 1 second later, and there it is. So it's pretty flexible. So yeah, that's a good question, and actually great to be able to know how to do that.
Thank you. That was helpful.
Good. 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 I'm glad I did something today.
Oh, no, I'm always appreciative.
Well, shoot. So let's see. Anything other questions from the peanut gallery? I've got 3 of you guys on there, and I've got 3 K-12 people. Anybody got any questions? Is it clear as mud at this point?
That's right.
Yeah. Well, you just got to get in there and just try something, cut a check, print a W-2. Oh, that didn't work. Let me try something else. And that's how we all learned the system. You know what I mean?
Right.
We all just took it out to spins and said, okay, let's just see. And does everybody know how to trace? We talked about tracing in a previous conversation. Do we all remember how to trace in the payroll journal? So I'm just making a point here, like, I don't know, just this guy right here. If I'm really interested in that STRS calculation, I could go ahead and calc single employee. So I'm recalculating booze, and it's restoring the whole file, which I hope it's not too big. I am in test, yep. Well, actually, it's going to be bigger than I thought. It's actually a big file, but let it go through. So once you trace, again, what we said before is that you have to make sure that you've turned on enabling tracing in your user setup card. So if you haven't, those options aren't even there when you go into the calculate. So that's really important. Then when you calculate either, I think it's single employee. I don't think you can do it in the full-blown calculate, but a single employee, you enable tracing, you click on the trace, click on the control you want, and you just hit calculate normally. Then you let it do its thing, and then once it's finally back to the screen again, then you go into actions, and there's an option there called view trace. And again, I don't think you'll see view trace again if you don't have that checkbox enabled in user setup. So that's how you trace. Why do we trace? Because when we're building controls, we want to actually see step by step what the heck the math is doing, and then we see our problem. The other day I saw one that Dan showed me, and it was just completely trapped in the trace. Once we saw the trace, we immediately knew what to do. All right, so view trace. Well, that's pretty simple. I think a terrible one, because what it's doing is it's just one large method step that does all the mathematics itself. There's just tons of lines of code that run when it computes this. So that's not a really great one. Probably a better one would be something like the FIT. So I think I'll go ahead and do the FIT one for you, just again to show you. So trace, FIT. And I'm not going to sort this time. Okay, view trace. There we go. That's a trace. That's a real trace. And there's the function numbers. Those are the function numbers of the method steps. And you can see the same method steps doing multiple times. They've got it running twice. So again, you just follow it through. Just try to understand what it's doing. Add base amount. That was the earnings. Then it stopped if tax exempt. Well, they're not tax exempt. I'm going on. Adjusted is taxable. Okay, that means take the amount that's in taxable and move it to the adjusted column. That's what it did. Deduction is standard. So at this point, it's doing a deduction. I guarantee it, not guarantee it, but I feel very confident you'll find this person has 0 deductions. So therefore, it's not doing anything. Temp is adjusted. Now it moves it to the temp. Okay, very good. Exempt other status. I'm not even sure what that is, but they don't have any of that, so that's not changing anything. Negative adjusted just means change the adjusted times -1. Okay. Add temp to adjusted. Add temp to adjusted. Adjusted is increased by temp.
Hey, Andrew, what is temp?
Temp is just this column here. It's just in any payroll calculation, there's two columns that will appear eventually in the journal. There's two other scratch amounts. They're just like working amounts that you can just, and they just call them adjusted and temp. Think of them as like temp 1 and temp 2. They're basically they're just temporary. They don't make it to the final journal line. They're just there as scratch pads.
Okay, thank you.
So what this says is add temp to adjusted. What it says is take this amount and add it, if you see, because really what it's really doing is just adding those two amounts. So negative 1624, positive 1624, well, that's a 0. That's really all that says to do. Then add temp is adjusted. Then I guess it's doing it again. I mean, that has the effect of switching the sign. I don't really understand it, but I'm sure it has some effect with these if you're using these exemptions. I just don't know really exactly what it's doing. Apply the tax bracket. So this is the big mama where it goes out based on your tax bracket. It goes ahead automatically, and just happen to know what it does, is it blows up the taxable amount times the number of pay cycles, let's say 24, 26, whatever, comes up with an annual amount, determines what that deduction would be for the whole year, and then prorates it right back. So that's how the mathematics, it's all doing it on the annual methodology. So then it comes up with that in number, and at this point then it just says extra withholding. So it's basically if there's extra withholding, it would just increase this negative by, let's say it was $10 to become, you would see it say 163. Minus 163. So then when it finally does produce it into the journal, it will round. So you see this here, but this will get rounded to 03, I am sure. And then the rest of these, you go, well, what happens to those? Well, they just poof into space. That's really all they do. And that taxable amount. So we should end up with those two numbers in the journal. I think this will be rounded to an 03. So let's just go and look at it now. FIT. Whoops. Except we're on booze. Gotta go to booze. Oh, let's just let me just hold on. It's all gone to another spot in the table. All right, there we go. 03 is rounded. There's that number. There is no temp. There is no adjusted. It's not retained. It's thrown out. So again, that's kind of a crazy calculation. High OSIT might even be more crazy calculation, but that's great. I mean, we love to use these because it really does help us see what the system is doing from an inside perspective. So that's it for what I was going to talk about today. I did note changelog as a future topic. What's our calendar look like next week?
Looks good for us at Trucka.
Yeah, I'm looking good too. So I guess I think do you guys know the changelog really well?
No, that would be awesome.
Yeah, changelog's a good one. I think that's always a good one to have. And that's not a full 90 minutes, so we're not going to do 90 minutes on changelog. I can tell you that right now. So I'm trying to think. In payroll, though, we still have we have all kinds of tasks, these mass updates. Should we just maybe go through some of these guys,
To add on to changelog for next week?
Well, we could do changelog next week, or, if you go with something different in between now and next week, then that's no big deal. But, we have still a lot of stuff that we can cover even in payroll. But a lot of these mass updates are pretty important ones, and they're kind of used in creative ways. So that's something else that we could also just touch on each one and what they're for and so forth.
Well, let me check with Angela and these guys for budgetary. They may be interested in some budgetary stuff.
Okay, good. Well, why don't you send me a note? I'll hold off. I won't update. It'll still say voiding checks, which it says right now. And it'll say that until you send me a note. And then I'll, of course, update everybody once you send me what the content should look like.
Okay.
All right.
Thank you kindly.
Well, have a great week. Anybody have any last parting words, or are we good to go? Bill, I guess you can stop recording.